So something very interesting happened here today in the markets. For one, the market staged a massive reversal in the last hour of trading today. At the same time, Fed Jerome Powell did an interview after hours and said some very interesting things. So we need to talk about exactly what was said. Futures market is open. Nasdaq futures are down about 0.12%, S&P down 0.17, and the Dow is down about 0.18%. But I think this could actually be some positive news. Before we get into it, hit the like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. Let me know your take on this situation. Potentially, could this be a bullish thing? Now, look at young POWELL right there. Young POWELL. He says he cannot guarantee a soft landing as the Fed looks to control inflation. There was a couple other things he said as well. He said whether we can execute a soft landing or not may depend on factors that we don't control. So, it's pretty interesting seeing that. It's one of those things where I think the markets sold off last Fed meeting after that initial 3% rally. Remember, the next day was down like 4% in the S&P. A lot of that, I think, had to do with the Fed just saying, you know, everything's great, don't worry about it, basically acting too confident, really like ignoring some of the issues that that people are talking about, and also taking off 70 basis points off the table. Definitely help to fuel some of the sell-off. Now, it also says Powell repeats 50 basis point hikes at next two meetings seems appropriate. And I think that's it. It says Fed Powell, the process of getting inflation down to the Fed's 2% will include some pain. Well, Unusual Whale said, well, at least it's been said now. And that's exactly the point. The Fed is acknowledging this. Now, what the markets have already done, you got to keep this in mind, because first glance, it might sound pretty bad, the Fed actually coming out and saying that. But the markets have already been very bad. The QQQ year to date was down about 29% at one point today, still down about 27.5% to close out the day. So the markets are already firmly expecting a very hard landing. And it's pretty clear to see when you go ahead and look at fintech. That's why fintech is actually so important here, to look at kind of what people expect for the overall economy, for the consumer, for tech stocks in general. Fintech, financial technologies. That's what fintech stands for. And you can see Square, PayPal, SoFi, any fintech has gotten really, really destroyed. Well, fintech's higher growth, but at the same time, these stocks getting destroyed like this in such a fast amount, or short amount of time, I should say, is telling you that people expect a lot of weakness in the consumer. And this right here, this chart and the PayPal chart, they're firmly pricing in a hard landing and a recession for 2022, and likely a global recession at that. So when the Fed comes out and basically acknowledges the bad news and actually has something to say about it, more times than not, it's going to be seen as a positive thing, even if the overall situation is negative. And basically, the best way to look at this is Fed Jerome Powell acknowledged bad news that was already much worse, right? It's already worse than what Powell acknowledged. At least he acknowledged that it's bad. Hopefully that makes some sense. If you're a bit confused, don't worry. It all comes down to market pricing, and we'll see exactly if the markets do take it as good news tomorrow. But the markets definitely staged a massive reversal towards the end of the day today, so it's looking pretty damn good. The futures are coming back up just a little bit. Nasdaq only down about 0.09% as of right now. Now, I do want to talk about what is going to happen tomorrow, because we do have some economic data, call it that comes out tomorrow, which is going to be import prices month over month, export prices month over month, and those come out at 7:30 in the morning tomorrow. At 9 a.m., you have Michigan consumer sentiment. Those tend to be pretty damn important for the markets, because those surveys, the sentiment, that really kind of gives you a gauge, or at least Wall Street likes to look at it like this. It gives you a gauge into how the consumers are behaving or expecting to behave over the next, call it 6 to 12 months. If these sentiment surveys are good, then hey, the consumer might be better than we thought, and that could be a very bullish thing. I don't really expect it to be like a huge market moving catalyst, but then again, you can be surprised by some of these Michigan consumer sentiment surveys. Now, at the same time, you have Fed Kashkari speaking tomorrow at 10 a.m. in the morning, and we'll see if we see a little bit of a pivot or a tone that tries to slow down this market sell-off. It's no surprise the Fed wanted the markets to fall, right, to help with inflation, asset prices, one would call a bubble, but not 27.5% or almost 30% as of earlier today in the first 5 months of the year. That's just too fast, and it will destroy the economy more than anything else the Fed is going to do, right? It really hurts a lot, especially being it's a midterm year this year. If the stock market is down 27.5% heading into voting time, you think it's gonna, mess with people's outlook on who they want to vote for? Of course. So it's in the government's interest, it's in the Fed's interest, because the Fed kind of caters towards whatever party is in power. After all, if you guys think I'm lying to you or something, Trump pressured Powell to stop tapering in 2018. And that's what finally gave us this bottom and kind of this V-shaped recovery. Not as quick as COVID, but it was still very, very fast of a recovery. Within about 2 weeks, we had gotten ourselves out of a pretty deep hole because Trump pressured Powell to stop tapering. So the Fed is not a part of the government, but it does cater to whatever, political power that is in power. So that's that. I do overall think that we have hit a bottom, guys. The fear and greed index is at 6 out of 100. It's like almost as pessimistic as you can get. 1 week ago, extreme fear of 17. Yesterday was 8. Today we closed at 6. And you can see market momentum, extreme fear, terrible. Stock price strength, just terrible. Net new 52-week highs and lows on the New York Stock Exchange. There's nothing hitting a new 52-week high right now. It's really, really bad out there. Stock price breadth, and you can see it's literally been straight down, meaning that most stocks are declining on a daily basis. Like on average over the last call it last 2 weeks, about 60 to 70% of stocks are going down substantially from there, possibly more as well. This chart's kind of an interesting one. Put to call options, that's extreme fear. All of these are at their highest levels they have been at, besides the VIX, which kind of shows you people are not panicking too much, and they're not really running into puts on the S&P 500. I will say I think a lot of people are holding a lot of cash right now, so I think this is really one of those indicators where the VIX can spike a lot more when there's something unexpected that happens, like COVID. The VIX went crazy. Nobody expected that. They all rushed into puts, right? Because after all, the VIX monitors the puts and calls on the S&P 500. The higher the VIX, the more puts that are being placed on the S&P 500. Well, why would you place puts on the S&P 500? Generally speaking, options are insurance. So that's why it's called premium, what you pay for them. Why are you going to insure a portfolio that is mostly cash? If you're talking about big money here, not the retail investor, but big money, typically they're not going to go out and try to play these intraday moves with millions of dollars in puts if they have most of their portfolio in cash. A lot of people are holding a lot of cash right now, and I think that could make for a decent sized recovery when that inevitably does happen. And then you do have safe haven demand, difference in 20-day stock and bond returns, and also at the lowest levels it's been in a year. So all of these are at their worst levels in the past year. Extreme pessimism, as well as the short interest, like I was going over in the other video on the S&P 500, is 17.3%. On the QQQs, it's 14%. These are the highest levels that we have seen in a very long time. So I think overall we are due for a bounce. The fact that Fed Jerome Powell did come out and acknowledge this could be seen as a bullish thing, and that's what I am going to be paying attention to coming tomorrow. And I think if Friday is positive, if we do have people buying stocks on a Friday, willing to hold them over the weekend, I do think that is a solid sign of a reversal. You can also see earlier in the day, we did hold support at 385. That was the level that we wanted to watch for. That was really, you know, if we didn't hold up there, then you're likely going down to 360. That would have inevitably been the bottom at 360. So I mean, there's not too much to go, believe it or not. If we do not find a bottom here, potentially just another, you know, $10, another 10 points on the S&P, but we did find support and did recover pretty decently here towards the end of the day, from 385 all the way up to 390 to 60. Now let's talk about what happened with AMC stock today. We did close up 8%, up 0.63% here in after hours. A lot of your quote-unquote retail stocks did catch a bid today and did go up, but AMC and GameStop, those were really the interesting ones. GameStop was halted 3 times to the upside, 1 time to the downside. Everything kind of came down, and then seen a little bit of a recovery into the close of the day today. There's going to be a lot of speculation on exactly what caused this today. There was, interesting enough, on a day like today where AMC and GameStop acted like that, Citadel kind of trolled us. It says, Citadel Securities, thank you AMC Theaters. Our teams in New York and Chicago had a great time watching the new Doctor Strange movie on the big screen, and then boom, you kind of troll us with the share price going crazy and then bringing it right back down. Who knows? You could speculate on that all you want. Now, what I will say is I think it really comes down to the option activity. I think a lot of this actually has to do with the bullish enthusiasm we've seen in the beginning of trading today in the overall markets. And then a lot of these hedge funds that had short positions actually starting to take off those short positions. Well, not short positions necessarily, but their put positions. And that in turn makes it so the market makers don't have to short as many shares. Hopefully that makes sense. Long story short, just like it works with a gamma squeeze, when a lot of people buy options, it pushes the price up of that stock. If a lot of people short or buy puts, it pushes the price of the stock down. So when you see a lot of those puts get sold in a lot of bullish optimism, then hey, you get a lot of market makers that can actually go out and buy the stock back and don't have to be short that stock anymore. Now, I will say, like I said earlier, we did hit 385.16 at the low, and we did hold up support there. If we don't hold support at 385, then we're falling to about 360. No other way to put it. And then that would be your low. I think that's likely to be the yearly low on the S&P. I really don't think we're going to fall to like pre-COVID levels, given how much money is actually out in circulation right now. But nonetheless, AMC stock is heading up a little bit here in after hours, up 0.76%. And we will see if we do get a bullish reaction tomorrow. That would actually be very, very interesting, because if we see a bullish reaction, especially in a lot of retail stocks heading over the weekend, that's going to be huge, because that's going to show you a flip in potentially the sentiment of investors. The last thing investors really want to do here is, you know, buy stocks over the weekend. Something could happen. You could lose a lot of money by that next following Monday, right? So I want to see how we do open, but nonetheless, I think this retail activity, or the retail stocks just going up in general, is probably a sign that we are at the bottom. Because after all, we have been waiting for Apple to fall. Apple has now fallen 5% yesterday. They were down as much as almost 5% today, but they did only close down almost 3%, which is still about an 8% move down. And that is definitely going to, you know, give us that flush out we need. Some of that capital that is selling out of Apple, stocks like Microsoft as well, that is heading back into a lot of stocks that are beaten into the ground. That's why a lot of your quote-unquote retail stocks were actually substantially positive today, here in my personal opinion. Obviously, could be wrong in that, but that's my opinion, and that's what I think happened today. AMC was up as high as 30% at one point today, so there is that. Maybe a little bit of trolling by Citadel. Nonetheless, that probably had a role to play. Kind of interesting timing with all of that. Now let's take a look at the option activity. You can see 26 orders totaling $3.53 million, positive order value of 63%. So it's a lot better than what we have seen over, you know, the past couple of days, couple of weeks. Over the last week in general, 177 orders totaling $68.92 million, positive order value of 42%. So 63%, much better than 42%, and that definitely played a role to what we are seeing today. Now the short interest of free float has continued to climb today. Borrowed shares at 3.06 million, return shares at about 500,000, so a net borrow change of an additional 2.5 million shares that are sold short, bringing that short interest to 21.45%. Current shares that are sold short of 110.57 million, cost to borrow max of 3.54%, utilization of 100%, and days to cover is sitting at 3.09. So that is that. Definitely primed for a short squeeze one way or the other if the markets do start to turn around, or specifically if AMC stock does get a bit of good news. Now I will say, when you're looking at the technicals here, we were not under $10 for all too long, right? About a day and a half, and we have since went above $10 per share, closing at $11.20 per share. Up in after hours, including that, you're at $11.32 per share. So watch to see if we can hold $10 per share. If we can, then $13 per share is going to be the next level of resistance, because that was the last level of support. Support tends to turn into resistance once you break under those levels, and vice versa. And then watch $15 per share if we get some really good news. You definitely want to watch the 50 and 100-day moving averages. 50-day moving average at $17.50 per share. 100-day moving average at $18.97 per share. If we break out above that for whatever reason, I don't know, I'm not a fortune teller, then that's where things could get a little bit crazy in this regime of lower liquidity. So that is going to be all for this video. Hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Come join us on the live stream in between 10 and 11 p.m. Eastern Standard Time every single day. We are live over there, including tonight, so come join the action and ask all of those questions. Get your free stocks, links down below in the description. Get that free money. You can't go wrong with free money when the Nasdaq is down 30% in the first 5 months of 2022. And if you guys want to come trade with me live in real time, link down below in the pinned comment for the trading community. So you guys enjoy the rest of your day, and I will see you in the next one.